Hello, for this video I will present about the comparison between two companies, which is Jayatesa and Subrtesa. Okay, first of all, for this company, both of this company are running, their main business is logging, and their second business is oil palm. To compare the ratios between two companies, I'm using liquidity ratios analysis and profitability ratios analysis. For liquidity ratio analysis, liquidity ratio analysis is the use of several ratios to determine the ability. Okay, for profitability ratios, it is a class of financial metrics that are used to assess business ability to generate earnings relative to its revenue, operating costs, balance sheet, or shareholders' equity over time using data from a specific point in time. So let's just move to the cross-sectional analysis. For liquidity ratios, current ratios, if the current ratio calculation is more than 1, so it would imply that the corporation has enough current asset to pay its existing liabilities. So for this comparison, we can see that Jayatesa in 2020 shows the highest ratios by 0.37 times than the Subrtesa, which shows only 0.25 times. So it shows that investor and stakeholders that if the business going down, it can always continue to pay for all existing facilities, which provide insurance for investors and the creditors. So next is quick ratios. It is a rapid ratios above 1. So it ensures the corporation has sufficient fast fund to repay the current liabilities. So therefore, the borrowers favor business with decent rapid ratios, and for both company, it shows the same ratios. There's no difference between two companies. And last but not least, for the cash ratios, for both company, it shows that both is vulnerable to financial difficulties. The cash ratio is better as applied to market trends and competitor averages, or whether shift considered over time in the same sector. So we move to the profitability ratios. In profitability ratios, we have 5 formula which I use to analyze the both company. First is gross profit margin, second is return on asset, next operating profit margin, net profit margin, and return on equity. So let's talk about the gross profit margin first for both company. So as we can see in the table, I can analyze that that the Jayatesa Holding Berhad has lowest percentage compared to Subrtesa Holding Berhad in 2020. So the greater the margin of gross profit is, the richer. A strong margin for profit suggests that the firm has managed the sales cost effectively. So second, we move to the return on the asset. In year 2020, the Jayatesa show that proof that they are more effectively managed compared to Subrtesa, since the percentage of the return on asset of Subrtesa is lower. Meanwhile, the Jayatesa is higher than the Subrtesa. the return on asset shown as a percentage, which the higher the figure, the more effective company management is at controlling its balance sheet to produce the income. So we move to operative profit margin. So in operative profit margin, excuse me, margin varies across sectors and is sometimes used as a benchmarking measure for a business against competing firm in the same sector. It also shows the best performance in a branch and suggests that the need of more study on whether an organization exceeds or falls behind its peers. So from the analysis or from the table, we know that the operating margin percentage for JTSA is quite lower than the Super TSA. So in general, the higher the operating margins, the greater the lower operating margins. It would also be reasonable to state that the only beneficial operating margin is one that increases with time. So fourth is net profit margin. So usually the net profit margin is calculated as a percentage, but may also be expressed in decimal form. So in 2020, we can see that the Super TSA Holding Berhad has used an ineffective cost structure compared to JTSA Holding Berhad. That is because it has a lower percentage than the Super TSA company. So last but not least is return on equity. It is a financial success metric measured by the splitting net profit into equities of owners. So for this return on equity, the JTSA once again showing that the company is much better than the Super TSA. For the ROE percentage, the JTSA has managed to achieve the highest percentage than the Super TSA Holding Berhad. So in conclusion, in a nutshell, the both company are quite good, and the for JTSA Holding Berhad, this company managed to achieve the highest ratios compared to Super TSA Holding Berhad, and that's confirmed that the JTSA has a better management than the Super TSA company. Besides, for liquidity ratio, as we talked before, it also confirmed that the JTSA also has better incurrent ratios, where it is 0.37 times, and it higher than the Super TSA current ratios. So that's all from me. Thank you.